as my wife reminds me frequently, entrepreneurs and innovators are the people laying face down with an arrow in their fanny. I love that home style encouragement.
Hey everybody, this is Joey Flores and Jonathan Neal with the MO podcast. Today our guest is Alan Snyder, who is a highly accomplished and serial entrepreneur, as well as an expert in finance and investing. Alan's big ambitious project that we're going to talk about today in the arts is aShareX, an innovative auction-based trading platform that allows people to bid to own fractions of high-value assets. Alan's also the managing general partner of Shinnecock Partners, which is a family office investment boutique. He's got a bachelor's degree from Georgetown University and an MBA from Harvard. Alan, welcome to the show.
Thank you for having me.
Thank you for joining us. Rather than have you recite your normal potted bio, why don't you tell us what is the most ambitious thing that you built from the ground up prior to starting aShareX?
Two things. Years ago, I was an intrapreneur. I was at a giant securities firm and was tasked with leveraging the Sears credit card base and launching the Discover card. That was quite an undertaking. I did it with a couple of other people, eventually an army of people, but that was one thing. And the second thing was I had this crazy idea that if you gave people the ability to compare insurance policies and finally be an informed purchaser, you might have a business. But eventually we became the largest seller of auto and home insurance in the U.S. And God bless Allstate, they own it today.
I'm curious, Alan, tell us a little bit more about what the background was for launching the Discover card.
The chairman of Sears, Ed Telling, had this glint in his eye about financial services. So he bought Dean Witter. And then he said, geez, we've got this card member base of 26 million Sears cards. And he says, well, we should go well beyond that. So that was the genesis of the Discover card. Now, the challenge was to build the merchant base and then to trigger usage of the card. Now, one of the things that we did, which was unusual at the time, was to give people cash back for using the card. That was, I think, the first time that had been done in the credit card business. So that's how it got started. And then we built it. I worked on the early stages of the card, and by then I'd had enough. So I toddled on and said, go for it, guys. I'm finished. So I left.
Well, moving on. So we've decided to call this the MO podcast and keep it somewhat ambiguous. But one of the abbreviations MO stands for is magnum opus, which, of course, right now for you might be the Discover card. But quickly, I think it's going to be aShareX. So obviously we know what aShareX is. You just helped us sell a collection of art by our artists for a whopping $146,000. So thank you for that. But for all of those people out there who don't know what aShareX is, can you tell us a little bit about it?
Well, it's a mouthful, but it's the first and only technology-enabled auction marketplace that, no BS, really democratizes fractional ownership of high-value assets. And, apropos that concept, somebody far more famous than me, Jenny Johnson, who's the CEO of Franklin Templeton, says ownership fractionalization of high-value assets is a megatrend in investing. So we're early, but it's beginning to be recognized as something, a force of nature that's going to spread like wildfire across the financial landscape.
So yeah, it seems fractional bidding, fractional ownership is definitely just like super rapidly increasing. So it must be nice to be riding the wave of that trend.
As my wife reminds me frequently, entrepreneurs and innovators are the people laying face down with an arrow in their fanny. I love that home style encouragement.
That's like the alternative to the man in the arena.
Yeah.
It's the picture. It's the picture immediately afterwards.
So, Alan, where did this idea come from? I mean, what was the impetus for you wanting to launch aShareX?
Well, a couple of things. Basically, for the first time, we're allowing people. Let's pick on the art world as one example. It's a $10 million Picasso for sale. How many people can afford to buy a $10 million Picasso? Very few. And of course, as we know as investors, if you buy one, you should buy a bunch of paintings at that price level. So very narrow audience. So we said, wow, what if we could give that same billionaire opportunity to people that can't afford to spend $10 million on a single painting, and giving them the ability to act independently of each other and bid for a fractional interest in that Picasso. And what they do is they compete with each other. Then they also compete with a 100% bidder. Nobody's brought both of those forces together. So you've dramatically expanded the potential marketplace by giving people the chance to invest like a billionaire and buy a piece of that Picasso. So that's really what we've done. Now, and again, I'll get carried away here, but think about it. For the first time, people are getting a chance to own a piece of any high value asset. They're getting market-based pricing, not some money manager saying, Jonathan, Joey, trust me, this Picasso is worth $10 million. So that's what we've built. It's a full-on trading system with pre-bidding, absentee bids if you're into auctions, and market-based pricing, market orders, limit orders. You can bid by telephone, you can bid in person, you can bid on your computer. All that's in place. The second thing, the fractional bidders, let's say, win the Picasso, win the auction. How do I track their ownership? Here's the second thing that we did. Every lawyer told me, oh, Alan, you'll never succeed at this. So we wanted an SEC qualified security, a common stock, to evidence the ownership of the fractional bidders. Joey, being the high roller you are, you may have bid, $1 million. Small fry like Alan and Jonathan, we may have bid $500. So you would have more stock than the two of us. You're getting a security that's been reviewed by the SEC. It took us a bunch of time to convince the SEC and endless legal work to create this offering circular, very detailed, as it should be. Now, here's the last concept. You get your stock. Traditionally in the investment world, a money manager says, Alan, you're too dumb to know when to sell this asset. So we're going to charge you 1.5% to 2% a year, but we have your best interests at heart, Alan. Don't worry, we'll sell it when the time is perfect. You say, wow, that's a lot of expense. What if I want to sell it? No, you can't. We decide that. The more we looked at it, we said, horse manure. Give that power to the common shareholders. Let them vote by a simple majority if they want to sell the underlying asset. In this case, the $10 million Picasso. In the in-between time, They may say, well, is there a secondary market? Yes, full disclosure always. The secondary market will be relatively thin. Some trading, if you need a new roof on your house, great. Okay, sell in the secondary market, and there's some tax advantages to do that in the collectible space. But maybe it's too thin and you say, well, I don't want to have a discount to the value of the asset. Great, then sell the underlying asset. So you're getting a vote, you're getting control, all the hallmarks of democracy.
Alan, why start with art?
Well, it's a great question because Joey asked, and I never really fully answered, and I apologize. What was the genesis of this? We said most investments in alternative assets have not a very investor favorable structure. It's expensive, blah, blah, blah. It's a private, non-reviewed by the SEC offering, or a REIT structure. All of the structure that I've outlined is superior to those. Why start with art? Well, we've been an investor in the art world as a lender against museum quality fine art. Picasso's, Basquiat's, Nara, all of that stuff. And I said, why should that opportunity be limited only to the ultra uber wealthy? Let's make it a fairer, more level playing field. So we said, okay, we think we've been a lender for the last 8 years. We said, learned a little bit of something about the marketplace, partnered with Inversion Art, which has been great on the deal we did with you guys. And we said, let's create this opportunity in the world of collectibles, art, gems, collectible cars. A Babe Ruth baseball card just sold for $6 million. Wow, let's give people, baseball aficionados, the chance to own a piece of maybe a Babe Ruth baseball card. All of that. That's what led us into this world of collectibles. If you think about it, Jonathan, it's really a proof case for what we've built. Have we proven it? Well, made a pretty good down payment. We did an auction in November. It worked. Eureka, this complicated trading system, worked without flaws. Then we did, which was a delight, we created this opportunity with Inversion, and we did an auction with you guys. Prior to the auction we did with Inversion, we had 638 people experiment with their bidding strategies in test drive and auction. We had 325 people sign up, initiate the process of opening an account. We ultimately had 65 people register for the specific lot we did with you. This was pretty neat. This was venture capital investing in the world of art. You all picked a coterie of up-and-coming artists and did intense due diligence on them, more than I've seen in the art world in general. Very powerful. Identified 6 artists, Guggenheim Award winners, etc. Sold the first NFT for $1.4 million, and then, with your help, picked 8 pieces of art from those 6 artists as a single lot. Instant diversification for an investor. So how did it go? We ultimately had 28 winning fractional bidders. They won it. We had a low estimate of 120, a high of 160. All in, those 28 intrepid souls that bid for it paid $146,000. Not only that, they pre-bid ahead of time. 31 pre-bidded, and the others came in during the auction. We processed in this system, without a hiccup, 285 bids in 7 minutes, start to finish, including the preamble from the auctioneer, because we have a live auctioneer that did it, which was streamed to all the participants.
That was seriously one of the most exciting things I've watched ever. Sitting and watching that live auctioneer. I mean, that thing went from $50,000 to $90,000 before he could say 50,000. Do we have 50,000? It was. I mean, super exciting.
It's exciting for all of us. So now, the cynics ask me, say, "Well, Alan, the exciting thing you did with inversion, people can knock it off without any problem." Well, inversion's like the Y Combinator of the art world, working with up-and-coming talented artists. Great, that's hard to replicate. We have filed 4 very broad and registered 4 patents on what we're doing. 250 pages of light reading. So that's what we got.
I'm curious if you have seen anything interesting from the behavior of the fractional bidders that sort of surprised you, or what's been the behavior of fractional bidders that you feel like might be unique or different than a whole bidder in a regular auction. I think that the kind of person who would purchase an entire collection of art like the one we put together for $146,000, might be a more discerning investor, right? If you're going to put down that kind of money, maybe you're doing an intense amount of research and so on and so forth. And I'm sure there are plenty of fractional bidders who do the same. But I guess my question, kind of follow-on question, was, do you think that the fact that fractional bidders are risking less money makes them slightly less discerning and maybe willing to pay a higher price? And ultimately that benefits the consignee, the person who you might be consigning a work and auctioning it for, because they're able to get a higher price because there's a lot of people who are risking smaller amounts and maybe are willing to pay a little bit more for the asset than a whole bidder might be willing to do. Do you think that that's the case?
No, maybe. I think that what really we're doing is bringing a new cohort of potential buyers to any auction. And by broadening the appeal, we're bringing pressure against the traditional 100% bidder. So maybe it pushes the 100% bidder to pay more, because now you've got this army of new people bidding against them. So that's, I think, some of the power of it. So I don't know if it'll drive the prices higher, but what I think it does is gives greater certainty that the auction succeeds. If you look at what we did, it's still up on our website, the amount of information that we gave to all of the bidders was unusual in its depth, more than I've seen in any other auction. This is creating, which I think is important, an informed purchaser, Joey, giving them the toolkit to evaluate where they're putting their hard-earned money.
Alan, what did you learn from your art lending activities prior to aShareX that helped inform or keep you on the track for what you were building with the auction house?
Well, a lender wants to be paid back. How prosaic. And the art world is tricky. Diligence, this is, again, it's not, I am a inversion bigot. Due diligence is important in any investment. And in the art world, it's equally important. So looking at where the art came from, in this case, it was primary art, directly from the artist. So learning from the art, lending, information, intense due diligence, really important.
Alan, moving into the modus operandi section of our MO podcast here, when you decided to go from having this idea to actually starting to execute on it, what's the first few things that you did?
Assemble a team of talented people. The technology we knew that would be tough. So we have a CIO that's played at the largest scale. Kevin Hughes by name, a really talented guy. One of the critical paths was, how the hell are you going to get through the SEC? So we had the good fortune to have a 30-year partner at Gibson Dunn work with us when we had an outside law firm. Buchalter did a great job. And very important, this is financial services, had another talent, Eric Arensberg by name, ran a $6.5 billion convertible arbitrage fund for AQR to be our CFO. And then, boy, I wish I had his talent when I was his age. We have a young hotshot with us, John Smith, powerhouse. So it was creating a team, Joey.
Yeah, every time I tell people about aShareX and what we were going to do with the collection and everything else, I have to explain to them first off what fractional bidding and all of these things are, and then how it aggregates all the bids in real time, does all this stuff, and the first thing everybody says, just like, dear Lord, that sounds complicated. And I don't think they mean from a value proposition standpoint. Like, it's easy to understand once you kind of get, but it's like the how does it work? I think people are just like, I know as an entrepreneur who's built tech platforms before, I am, I don't know that I would want to take on building an aShareX. It sounds incredibly complex.
Well, battered and bruised, we put it together and it works. I guess you've asked me at various points, what was the attraction to it? I don't know if your audience knows this. The art world is big. There's $1.7 trillion worth of art outstanding. There's about, give or take, $65-70 billion a year of annual turnover. I talked about jewels and gems. It's another 340 billion. Collectible cars, blah, 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 sports memorabilia, comic books. You add that up, it's probably another $1 trillion. I don't know if you guys saw this. SoFi, which is a company I've followed for years, they have about 8 million customers today. They were talking about that they're going to get in with both feet into the world of alternative assets. They cited some statistics that sort of blew my socks off. The current market for alternative assets, which is a growth structure, it's about 16 trillion. They estimate that by 2028, that will grow to about $25 trillion. That's, from a large base, that's a lot of growth. And they're going to attack it. Gives me some encouragement for what we're doing.
Alan, I want to go back to issues of liquidity with aShareX, and let's say year 5, the shareholders of the Inversion Art collection, for example, let's say 1 or 2 of the artists' careers have taken off. A painting that was valued at about $25,000 when the collection sold 2 weeks ago becomes worth $500,000, and you've been getting appraisals, and you've been providing reports to the shareholders, and they give a sense that wow, this could be an extraordinary time to sell one of the works from this collection and get the returns that we've been hoping for. Art sales like that don't just happen. So just because the shareholders want to sell something doesn't mean that it's particularly easy. So I'm kind of curious your strategy, your approach, and how you think about bringing liquidity and sales to the buyers. Is it something where you'll put the item up again for auction on aShareX and try to sell it that way, or are you going to have a team going out and trying to privately place these assets and things like that, to help out the liquidity situation?
Great, you buried a lot in there. Let me break it down to the pieces. The fractional holders get every year an accounting. That's kind of nice. They get an annual appraisal, which you alluded to help them make a decision on their voting. So they get that every year. The art, where the hell's the art? Maybe it's off on exhibition. We know exhibitions have a tendency to increase the value of the art, giving it wider exposure for the artist and the particular piece. We're actually talking, kind of fun, to some museums that may want to hang the art in their museum. Now, that's where it sits. Ultimately, as you said, the shareholders say, all right, I want to sell it. At that point, we will look at the market and figure out the best way to sell the art. Maybe it's another auction. Could be refractionalize it with a new set of investors. That's one way. 2, sell it outright, as you said, privately, using all the experts that exist in the art world. So it's managing the exit as well, which is important. So either sell it privately, sell it through another auction, maybe with us, maybe directly with an independent auction. Maybe it goes to Christie's without our involvement, or Sotheby's, Bonhams, all the panoply of players that are out there.
Alan, I've got a more of a background question for you that digs a little bit deeper into your experience in the insurance world, which I find endlessly fascinating. Hopefully some of our listeners will as well. That's a tall order. So I want to ask you, are there similarities between insurance markets and the art markets as you've discovered so far? What are some of the kind of comparisons you'd make between the two?
Well, that's an interesting and tough question. What do insurance companies do? They underwrite the risk to decide how to price it. You think about the art world or collectibles. We did it with you guys. You're in effect performing that, in this case, identical function. You're underwriting the artist, evaluating the artist, you're evaluating the art, looking at historical price patterns, what are the classic indicia of success for an artist. So I would say that's the significant parallel between the insurance business and the art world, as I answer the question on the fly. And by the way, audience, he didn't give me that question ahead of time, so I'm hip shooting.
Alan, I'm curious. So, I mean, I think hopefully we'll have some entrepreneurs also listening to these episodes, and particularly more junior ones. I think would look at somebody like yourself with so much experience, having helped launch the Discover Card and running Shinnecock Partners and all of these things. I think it can be people can get an impression that you're so seasoned an entrepreneur that launching the next business, of course it's just going to happen, right? Like you're going to build something phenomenal. You have so much experience to draw from. What's a lesson that you've learned in building aShareX that reinstated your sense of humility as an entrepreneur? What's something that you were like, Lord, this was hard, or this was didn't go the way I thought it would?
I would say in general, it's always harder than you first think. I kidded about my learning and building the insurance exchange. It always takes longer than you would like. There are always unforeseen issues. That's typical, and because as smart as, of course, you think you are. I mean, thank you for the lead-in, Joe. It just makes me old. But the classic thing is, it's hard. So I think you have to say, am I willing to put my finger in the socket and say, drain energy? It's going to be an intense effort. It's sort of the trite expression. If it's going to be for everybody involved, it's not a single person. It's up to me to get all the things done that I have to get done. It's intensity of purpose. And, in aShareX's case, we raised $6 million to date. We want to raise another $5 million. I learned, here's a learning. When I built the insurance exchange, boy, did I do some dumb stuff. I raised $200 million. Really foolish. Too much. We were going to boil the ocean. Ridiculous. Made it hard to sell. Expensive for sure. Hopefully, we're not going to repeat that problem or that bit of stupidity with aShareX.
What's the biggest surprise you've encountered so far, either negative or positive?
I guess it's being forgetful. I laughingly talked about test drive and auction. One of the things we learned was that people go into auctions, charity auctions, more formal auctions, eBay auctions, all that stuff. But we discovered in the research that people don't feel totally comfortable. So we said we had to create something to take some of the uncertainty, the lack of comfort out of the equation. That's why we built Test Drive and Auction. Now here's the learning. Test Drive and Auction turned out to be a terrific tool for us to throw things at the system. Wasn't just great for people we want to have participate with us. It was also a terrific tool in testing the system in the early days. So it had a double whammy that foolishly I never anticipated.
Why do you think people are uncomfortable with these auction platforms just naturally?
I think there's some opaqueness, some cloudiness about how they work. I think we've tried to say and post on the website, here's how this damn thing works. You can experiment with it yourself. You can test the turkey out. And here's the rule set, open kimono. So I think some of that in a lot of other auctions is not as clear.
Inversion is the second company I built in the cultural space, and what I've learned both times is that anytime you have a model that charges artists for any form of service, you're going to get some like cultural purists who complain that you're taking advantage of them, or that we should let the nonprofits and charities be the ones to provide these sort of support services to artists. That to take money out of their hard-earned pockets is somehow doing them a disservice. Meanwhile, all of the artists I've worked with in both companies know that the services we provide cannot be found anywhere else. I'm curious if you've had any haters, people who just think something about the aShareX vision is terribly wrong, and what their complaint might be.
Well, sure. There's a company that's done a hell of a good job called Masterworks, that's done a hell of a good job of describing the investment opportunities. They're focused just on art, but describing what the investment opportunities are in art. Now, they're very different than us. I give them credit because they've created a coterie, a cadre of people that for the first time are saying, gee, maybe this is something I should invest in. And they've done a very good job at that. Now, their positioning is very different than us. Their positioning is really that, as I've had some fun describing so far, maybe not too critical, but they're a money manager. They're saying, give us your money, we'll invest in it, and we'll control everything. We've said, self-directed people, think about the Robinhood, Schwab, Fidelity, Vanguard, this whole enormous universe of people saying, let me do it. I'm not stupid. So that's really where we are. And as a result, we're considerably less expensive, less frictional cost versus a money manager. So that's the difference. But I give them credit. They've expanded the category.
Jonathan?
I'm glad you mentioned, I'm glad you mentioned Robinhood, because as you were describing the test drive and auction and the discovery of putting more tools into the end user's hands, I was sort of imagining the explosion of kind of casual retail investing, mobile enabled, that Robinhood introduced into the system, which really took off obviously during the pandemic when everyone's sitting at home with their stimulus checks, deciding that they're going to get rich trading AMC, and and now look it's back. So I think that piece is interesting. if you then overlay that with the, again, the sort of art market, I mean, one of the things that we hear endlessly in this field is that there needs to be more regulation, right? There needs to be more oversight, maybe more due diligence, more transparency. Other people saying actually it is heavily regulated as it is, and there's plenty of transparency, and the KYC and AML rules have stepped in to make quite a lot of due diligence more transparent for people who are operating in that field. But I'm curious your opinion. Do you see the art market as underregulated, as overregulated, or as kind of where it needs to be given what that market is?
Oh, I think you can have excessive regulation, which is negative. I think the art market, to my shock, New York State blew up a lot of the legal controls they had over the auction houses. Do I think they went a little too far? Yes. I think some of the laws I thought they had, and they blew up, to my astonishment, were not bad. So I think some regulation's good. The hard part in the art market, you think about real estate. Real estate, you have title insurance, and you can track who owned the property all the way back. I think that will happen ultimately in the art world. There'll be some way of doing that. There are people that are trying it until you get everybody. Maybe it takes regulation to do that. I think that would help. The provenance of the chain of title on a piece of high value art, I think would be helpful. Will we see that? I don't know, but I think it would be helpful, because that would, some of this well-known issues that have occurred in the art world, if you had that, a lot of that would not have occurred. So maybe that's one place ultimately in the art world where you could have some enhancements to the process. One other thing, and while you're pausing, you want to put the cork in. The one thing that we also did, which was novel, you think about a musician. If I write a song, I have this company called ASCAP and others that every time that song is played, I get a commission. The art world doesn't have that. Think about a young artist is starting out, selling some art to put food on the table, God bless. Then the art may appreciate like crazy. The artist that created that art does not typically participate in that. The answer to the artist is, well, sell more art, make more art. Well, it's pretty hard to create good art. So maybe you'll create that as another opportunity in the art world. We did that, as of course you guys know, in this last auction, where we gave a participation to the artist in the future success. I think that's also, a first in the United States. So I think some version of what's happened for the music world, maybe that'll happen in the art world. It'll be pretty exciting, and I think more fair for the artists.
Alan, in the interest of time, I'm going to move us into the more opinions segment of the MO podcast. If you had $10 million handed to you to build a company with that couldn't be aShareX, any other big ideas?
Oh, that's interesting, because you hinted at a question like that, and I was thinking of SoFi's branching out into alternative assets, where that's one. If I had $10 million, where would I? Well, having grown up in the securities business, you got to be very careful in making these kinds of statements. Do I think AI is powerful and it's just starting? Yes. I think there endless places to deploy capital in the AI space. And you got to be careful about froth. Everybody remembers when the web started, it was the second coming in the late 90s, early 2000, then it crashed. I don't think AI will crash, but I think the multiples that are being assessed on some of the companies or created for some of the companies pretty robust. But I think the technology is awesomely powerful and therefore will infiltrate almost everything.
Yeah, I've been in tech startups for 25 years. I started my first company 14 years ago. Lots and lots of hype cycles have come and gone, and I will say that this AI hype, I don't even I feel bad even calling it a hype cycle. Like, it's the first time that I've seen so many products coming out that I feel a little bit of jealous. And I see some of these AI startups, and I'm just like, man, this is one of the coolest products I've ever seen. And I'm getting a little bit, little envious of the companies that are making some of the cooler products in the AI space. Like, this is the first hype cycle I wouldn't mind riding out of the, forget about NFTs. Back in 2021, everybody was telling Jonathan and I we should switch our focus to NFTs. Of course, we're still waiting for them to come groveling back and apologizing for such ill advice. But
You're such a cynic.
But the AI craze is real. Like, I use AI tools every single day, and I'm definitely it's an area that, like, I just think there's just boundless opportunity, and I think a lot of it's very real.
Well, being the young sprout that I am, I think about the power of AI in the world of biotechnology, drugs, medicine in general. Wow, Joey, you're going to live forever. Scaring Jonathan half to death.
Please say it isn't true. Please say it isn't true. All right, we've got another more opinions question for you. I'll keep the funnest one for the end. So we'll go to what's a person or project in the creative field right now that you are super excited about, or that you admire?
Well, I think I sort of answered. I think that there's endless stuff in AI that's worth exploring, all the nooks and crannies that it's being applied to. I think that's the fascinating part to me.
Is there one project that is there a product you've used that that you're excited about? But again, in the creative field, arts or something, have you tried anything?
Nothing that I'm going to go on record to cite.
Yeah, one follow-up quick question there. What, if any, AI tools have you used for helping to build aShareX?
Well, clearly we use for customer interface stuff, we've used parts of it to handle incoming calls and polishing it in doing some of the writing. If you go to our website, you'll see a fair number of articles. We've used that as a research tool. There's a couple of wildcard ideas that, again, I won't go into, that I think are possible for us in aShareX. That's sort of in the skunk works, if you will. Those are the immediate things. And some of the, interesting enough, some of the AI and some of the financial modeling, the only thing in a young company is the more detailed you make your financial models, the more thoughtful it forces you to be. But you also have to accept, that since you don't have all the answers and all the perfect knowledge, it's going to change a lot. There's some ways of using AI in those areas that are pretty compelling.
Nice.
All right, last question. Alan, if you could steal any work of art in the world and get away with it, what piece would you take?
Well, it's an interesting one that we've run across, and since I'm a sizable investor in aShareX. I'm not going to buy it personally. But there's a Goya bull, and it's a really cool painting. Goya painted this bull, and the history of the bull was, and I've forgotten, I should have thought about it before. I didn't know your question, but the bull was very famous because it had gored a toreador, and there's another piece of art with the toreador in it. Then Goya said, this is really pretty neat. He's decided to paint the bull that sadly for the toreador, gored the toreador, but it's a really neat painting. An old master, maybe, but pretty neat. And then on a more contemporary basis, I think some of the Ernie Barnes artworks are special.
Alan, thank you so much for coming on our podcast. Thank you so much for the awesome partnership that we all embarked on. It was incredible. I had another question earlier that I was going to ask about sort of like, there's a correlation between startup founders and sociopaths, and I was going to ask you what's your most sociopathic quality, but after having worked with you for 4 months on the collection thing, I know that you're just no. I think you're a pure soul. I think you were an incredible partner, and I think that you very much took the artist's interests to heart, and I really I don't think we could have asked for a better partner, and I think anyone who gets to work with aShareX is going to have a great experience and should feel very privileged to do so. So thank you for being on the show.
My last comment and my suggestion to two hotshots, you and Jonathan, for the next one you do, we should all have a glass of wine or a great bourbon in hand to ease the conversation and make it that much more fun. And of course, in my case, a cigar in hand as well.
You know what? We didn't tell you not to do a cigar this time. That was for the AMA, but I should have told you. Feel free to bring your cigar. This is the MO podcast, and that is definitely your modus operandi.
It's my
one of the other questions was going to be, what is your most cherished collectible? And I have a feeling for you, it has something to do with cigars.
For the next interview. Goodbye.
Yeah. Okay. Thanks, Alan.
Thank you, Alan. Take care.
Thank you for your time, guys. And let's do more stuff together. Goodbye.